Title: Empowering Investors: The Significance of Shareholder Activism in Influencing Corporate Governance and Investment Returns. Introduction. In the realm of corporate governance and investment landscapes, shareholder activism emerges as a potent force, reshaping the dynamics between investors and the companies in which they hold stakes. The influence wielded by shareholders transcends the traditional role of passive ownership. As activists strategically leverage their positions to effect change, champion governance reforms, and enhance investment returns. Understanding the significance of shareholder activism requires unraveling the intricacies of its mechanisms and exploring its transformative impact on both corporate behavior and the financial outcomes for investors. The genesis of shareholder activism. Shareholder activism arises when investors, dissatisfied with a company's strategic direction, operational efficiency, or governance practices, seek to actively engage with the management to drive change. This proactive stance distinguishes activist investors from their passive counterparts, as they assume an assertive role in shaping the trajectory of the companies in which they invest. Activists often articulate their concerns through public letters, proxy battles, and direct engagement with other shareholders, catalyzing a dynamic discourse on the company's governance and strategic decisions. Corporate governance as the crucible. At the heart of shareholder activism lies the quest for improved corporate governance. Activists scrutinize companies for governance practices that may hinder shareholder value or compromise the interests of minority stakeholders. Issues such as executive compensation, board composition, and transparency are thrust into the spotlight, prompting companies to reassess and recalibrate their governance structures. Consider a scenario where an activist investor questions the exorbitant executive compensation packages within a company, arguing that they are not aligned with performance metrics or shareholder returns. Through strategic dialogue and, if necessary, public pressure, the activist endeavors to reshape the compensation landscape, fostering a governance framework that aligns executive rewards with long-term shareholder value creation. Strategic interventions in operational efficiency. Beyond governance reforms, shareholder activism often targets operational inefficiencies that may impede a company's growth or erode shareholder returns. Activists conduct rigorous assessments of a company's operations, identifying areas for improvement or restructuring. This can encompass everything from cost-cutting measures to strategic divestitures, with the overarching goal of enhancing operational efficiency and boosting the company's overall financial health. For instance, an activist investor might advocate for the sale of underperforming business units within a conglomerate, arguing that the divestiture would unlock shareholder value and allow the company to focus on its core strengths. The ensuing strategic intervention, if successful, can lead to a streamlined and more focused corporate entity, ultimately translating into improved investment returns for shareholders. The ripple effect on investment returns. Shareholder activism possesses the potential to catalyze a ripple effect across the broader investment landscape. As activists target underperforming companies and champion governance reforms, they contribute to a market environment where companies are held accountable for their actions. This, in turn, fosters a culture of responsiveness and adaptability among corporations, promoting a virtuous cycle of enhanced performance and value creation. Investors attuned to the signals of shareholder activism can strategically position their portfolios to capitalize on the potential for improved returns. When activists succeed in driving positive change within a company, The resulting uptick in operational efficiency and governance standards can translate into higher stock prices and increased shareholder value. Thus, shareholder activism becomes not only a catalyst for change but also a driver of enhanced investment returns for those who align their strategies with its transformative influence. Navigating the challenges of shareholder activism. While shareholder activism holds immense promise, it is not without challenges. Activists often encounter resistance from entrenched management teams and boards, requiring resilience and strategic acumen to overcome obstacles. Moreover, the public nature of activist campaigns introduces an element of volatility to the affected company's stock prices, demanding a nuanced approach from investors navigating these turbulent waters. Consider the case of a high-profile activist campaign targeting a well-established corporation. The ensuing media attention and market speculation can lead to short-term price fluctuations, creating both risks and opportunities for investors. Astute investors, recognizing the potential for enhanced long-term value creation, may weather the short-term volatility with a focus on the overarching goal of driving positive change within the company. The evolution of shareholder activism. Shareholder activism is not static. It evolves in response to market dynamics, regulatory changes, and shifting investor priorities. In recent years, environmental, social, and governance (ESG) considerations have gained prominence in the activist playbook. Activists are increasingly leveraging their influence to address issues related to sustainability, diversity, and social responsibility. Recognizing that these factors can significantly impact a company's long-term viability and resilience. For example, an activist investor concerned about a company's environmental practices may push for greater disclosure on carbon emissions, sustainable sourcing, and environmental impact. By placing these ESG considerations at the forefront of the activist agenda, investors can contribute to a paradigm shift where companies integrate responsible business practices into their core strategies, aligning with the evolving values of modern investors. Conclusion. In the dynamic landscape of corporate governance and investment, shareholder activism emerges as a transformative force, reshaping the relationships between investors and the companies they invest in. Beyond its role in championing governance reforms and operational efficiency, shareholder activism represents a catalyst for improved investment returns in a market environment where companies are held accountable for their actions. As investors navigate the complex terrain of shareholder activism, they must embrace a nuanced understanding of its mechanisms, challenges, and potential rewards. Recognizing its power to unlock value and foster positive change in the ever-evolving world of finance.